Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Tuesday, everybody. It has not been a good week for capitalists or other investors inside or outside of China. Let's start closer to home. Zhang Hongli, former senior executive vice president of the massive state-owned industrial and commercial bank of China, who has also spent time working for Goldman Sachs and Deutsche Bank, has been detained and is now under investigation. Zhang served with ICBC for 8 years, from 2010 through 2018. The bank is the world's largest by assets. After leaving ICBC, Zhang joined private equity giant Hopor Investment Management Co-Limited as co-chairman. Zhang was not exactly a low-profile guy. Back in 2019, the New York Times wrote of the man, quote, "Mr. Zhang's mandate was to transform Deutsche Bank into a player in China. That required winning over the Communist Party. Mr. Zhang began hiring aggressively. Many of his recruits, dozens and dozens of them, according to spreadsheets compiled by the bank's lawyers, were young, inexperienced, but well-connected. They came to know him as Uncle Zhang." End quote. It has also been reported this week that Zhao Bingxian, China's Warren Buffett, as he has been called in the past, was detained a few months back in relation to this investigation of Zhang. The official reason for the detention of Zhang has not been released. It does appear to be a corruption probe. The degree to which and specifics of the political entanglements is not clear. But as several commentators have already observed, this will likely have some in the financial sector nervous, with one expressing that these detentions and the opacity around them are not going to improve investor confidence. And on this point, foreign investors continue to pull large sums out of China. This week has seen several new reports on this now months-long trend. UK-based Reuters, in a piece called "China's First Deficit in Foreign Investment Signals West's De-Risking Pressure," reports that direct investment liabilities, a measure of FDI, were a deficit of $11.8 billion during the July through September period, according to preliminary data of China's balance of payments released late last Friday. That's the first quarterly shortfall since China's foreign exchange regulator began releasing the data back in 1998. US bank Morgan Stanley told clients in a note this week that global fund managers sold China equities sharply in October, with China and Hong Kong equities seeing a combined $3.1 billion in net outflows from active long-only funds last month, a third consecutive month of net selling exceeding $3 billion. The Morgan Stanley analysts explain, quote, "The outflows are mostly due to regional funds rebalancing out of China, in which European domiciled funds lead." End quote. Yesterday, the US-based Wall Street Journal reported that foreign firms, quote, "yanked more than $160 billion in total earnings from China during 6 consecutive quarters through the end of September, an unusually sustained run of profit outflows that shows how much the country's appeal is waning for foreign capital." End quote. The torrent of earnings leaving China pushed overall foreign direct investment in the world's second largest economy into the red in the third quarter for the first time in a quarter of a century, it writes. The outlet explains that a range of factors have contributed to the profit exodus. Many of these will be very familiar to regular viewers of China Update. Those include a widening gap between China's interest rates and those of the US and Europe that has made it more attractive to park earnings in the West. Quote, "But many foreign firms are looking for better uses for their money as China's economy slows and geopolitical tensions rise. Chilly relations between Beijing and the US-led West have pushed global companies to rethink their supply chains and exposure to China." End quote. The question is how much of this is just about yields and how much of this is about the political and geopolitical tensions we touched on this latter point. Quote, "No doubt some of the shift is because firms can get better yields on their retained earnings outside of China now, but I do not think anyone seriously thinks this is just about chasing better yields. As former South China Morning Post editor-in-chief wrote in a recent piece titled "Foreign Investors Are Exiting China in a Trickle, but it will soon become a river unless Beijing takes immediate and substantive steps to reassure them," Xi and his team bear much of the blame for the worsening foreign investor sentiment towards China, and there is a risk of much more money leaving unless policies change. End quote. Let's examine some of the article that Bishop makes reference to. Quote, "It is high time that the Chinese government should review its policies toward foreign investors at a time when the country acutely needs overseas investment to revive its economy hit hard by 3 years of zero COVID controls. Foreign investors' sentiment towards China has particularly soured over the past few years, as an increasing number of investors have privately complained bitterly that China has become uninvestable, an ominous view which seemed unthinkable even 5 years ago. China must review its policy of exit bans, which prevent overseas businessmen from leaving the country because of a business dispute or connections with individuals under investigation. The policy is opaque and arbitrarily enforced, which hurt Beijing's efforts to welcome foreign investment simply because any overseas traveller could face the unsavoury prospect of being stranded in China indefinitely." End quote. And in relation to the relevance of geopolitical tensions, according to a paper published by the European Central Bank yesterday, Monday, more than 40% of multinational firms surveyed expect to move production to politically friendlier countries in the coming years, with risk related to China cited as the main concern. In an economic bulletin article, the European Central Bank explained, quote, "As to those countries which posed or could pose a risk to supply chains in their sector more generally, 2/3 of all respondents cited China." End quote. Next up, Australia-China relations. If you're getting some value from today's episode, don't forget to hit the like button. About 50% of regular viewers of the channel are not subscribed to China Update. If you do like this sort of content and you'd like to be on top of it, maybe consider subscribing. This is also a big help for the channel. Sharing this with someone who you think would also get some value is another big help too. And for anyone who can go the extra mile, Patreon and Buy Me a Coffee links are in the description below. This channel relies primarily on subscriber support. Thank you so much, everybody, for that ongoing support. Next up, after years on freeze, China and Australia's relations appear to now officially be stabilizing again. The Australian Prime Minister is in China, where he met with General Secretary Xi Jinping, who said that the bilateral relationship is now on, quote, "the right path to improving and developing relations," end quote. The relationship had been bumpy for years, reaching nadir in 2020 when Beijing slapped the South Pacific Western nation with economic penalties after the then Prime Minister called for an investigation into the origins of COVID-19. During the leaders' meeting, Xi Jinping expressed, quote, "China and Australia, as countries in the Asia-Pacific region and important members of the G20, have no historical grievances or fundamental conflicts of interest and can completely become partners who trust and achieve mutual success," end quote. The Prime Minister told Australian media that, quote, "it was a very positive meeting," end quote. Australian media outlet the Sydney Morning Herald reported on the expected outcomes of the visit, writing that the two governments are poised to announce the resumption of key ministerial dialogues that have been frozen for more than 2 years. The Prime Minister is meeting with Premier Li Qiang today in Beijing, where further details of this deal and others are expected to be announced. The focus of the Prime Minister's visit appears to be trade, with Australia's leader being joined by Trade Minister Don Farrell during the 4-day visit. China is Australia's biggest trading partner. Chinese financial media outlet Yicai reported yesterday that a record number of Australian firms are attending the 6th China International Import Expo being held in Shanghai this week, quote, "as China-Australia relations recover," end quote. Thus it appears that trade is acting as a stabilizing pillar in the relationship. However, popular sentiment, that is, the Australian public's view of China and China's public's view of Australia, remain at historic lows. And then, of course, there is the military and security dimension. As a close US ally and regional middle power, aligned with players like Japan, South Korea and others who wish to counterbalance China's regional power and influence, Australia will continue to engage in security competition with the People's Republic of China. Indeed, the Australian Prime Minister is the first leader from AUKUS to visit Beijing since the Trilateral Security Alliance was formed along with Britain and the United States in 2021. While there are good signals on the trade front, then military tensions in the region continue to boil, with the latest close encounter occurring between China and another Anglophone middle power and US ally. Which leads us to our final development for today. We need to take note of yet another military close encounter. It could well be that China has an official policy of testing foreign militaries through close encounters in the East and South China Seas, as we have seen many of these exchanges in recent months. In an official statement this week, the Canadian Department of National Defence expressed that a Chinese warplane fired flares in front of a Canadian military helicopter over international waters of the South China Sea last Sunday. An act which was, quote, reckless and could have resulted in the downing of the aircraft. The risk to the helicopter in that instance is the flares moving into the rotor blades or the engines, so this was categorized as both unsafe and non-standard unprofessional behavior, end quote. The Canadian helicopter was searching for a previously detected submarine when the incidents occurred. US media outlet CNN reports, citing members of the Royal Canadian Navy, that the incident was the second of two encounters the Ottawa's helicopter had with Chinese People's Liberation Army Navy J-11 fighter jets over international waters on the 29th of October, quote, which saw the fighters get as close as 100 feet from the helicopter, end quote. The first incident was over international waters outside of 34 miles of the Paracel Island chain in the northern part of the South China Sea. The second was also over international waters outside of 23 miles of the Paracels. Chinese military-run outlet China Military reports that in response to these statements from the Canadians, Chinese defense spokesperson Senior Colonel Zhang Xiaogang expressed, quote, the Chinese People's Liberation Army organized naval and air forces to identify and verify in accordance with the law and repeatedly issued warnings. However, the Canadian helicopter not only refused to respond, but also took provocative actions such as flying at ultra-low altitude. Afterwards, the Canadian side hyped it up through the media to accuse and smear China, end quote. With this latest exchange, several commentators have argued that these close encounters appear to be increasingly reckless, and that as such, the odds of a collision appear to be increasing. And with China's relations being at historic lows with all these countries, not the least with the United States, these are indeed very dangerous times. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Tuesday, and I will see you all tomorrow.